Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that EURUSD has just broken a historical structure level to the downside. In fact, from here, all this move to the upside was created. Again, here the market tested its zone and rejected it to the upside. Again here, and now we have successfully managed to break below all this previous monthly support, which is now turned resistance here. Usually in a situation like this, you would expect a retest of this previous support and resistance, considering how strong and how back in the past this structure level for the market holds, before then seeing more potential bearish continuation. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse. And if we do that, we can see how the structure area aligns perfectly with the 0.618 and 0.786 Fibonacci retracements, creating a very strong confluence of supply and resistance at this zone that we could expect the market to test before then rejecting it to the downside. Now, if we drop on the weekly, what do we see? Now, from a weekly perspective, we had here the creation of an M pattern. In general, after the creation of an M pattern, what you would expect is for the market to create a move higher, complete the pattern at the neckline, and then create more bearish continuation, which is in fact exactly what the market did. First, we had the completion of the M pattern, and then we had the continuation to the downside to complete this impulse correction and impulse pattern to the downside. And now what we can notice is that we have also broken below the previous low, therefore creating new structure, because as you know, previous support, once it is broken to the downside, is turned resistance. So in this case, if we get a retest of this previous support and resistance, there is definitely the possibility to see the market reject this level to the downside. Also here on the weekly, since we have an impulse, if we want to measure the correction, we must take our Fibonacci from the high to the low of the impulse, and we can notice how here the 50% and 0.618 golden ratio are aligning perfectly with the previous daily support, which is now turned resistance, creating also here a confluence of supply and resistance that we could expect this market to test and then to potentially reject to the downside. Dropping down the daily, what do we have? Now, from a daily perspective, we can notice how we did have this impulse to the downside. Now the market has started the correction and is trying to create a little bit more continuation to the downside. Now, before I speak about the manipulation that there is a good probability that the market will create here, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators and institutions in the market are doing. And we have to check the data for the euro, because keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you're actually already checking EURUSD. Now, what we can notice with the last reports is that net positions have been growing. We went from having minus 47k net positions up to having plus 33k net positions, meaning that we went from having more shorts than longs from an institutional perspective to now having more longs than shorts, with 208.7k longs compared to only 174k shorts, reaching 33.7k net positions. So from an institutional side of the market, EURUSD is starting to shift to bullish, meaning that what we have seen on the monthly, that is basically a potential move to the upside and correction to this area, seems definitely at least a possibility. Now, how this usually plays out is that the market creates a manipulation in which you have first a bit of a move to the downside, people start entering in shorts, their stop losses are above this high, and at that point the market creates a rejection higher. Now, if that will actually be the case, we don't know if that will be the case, but if that will be the case, if the market will create first a bit of a move to the downside and then break above this high, stopping out everybody that had their stop losses above this zone. At that point, we would have the creation of this W formation here. And in general, after the creation of a W, what you would expect is for the market to create a rejection to the downside to complete the pattern at the neckline, which is the previous resistance turn support. And then we would like to see the continuation to the upside for the completion of the impulse, correction, and impulse pattern to the upside. But approaching the moves one at a time, first, there would be the possibility for a potential short-term shorting opportunity back down to the neckline for the completion of the W formation at the neckline, which in this case would be around this zone. So if the market actually creates this W, how we could be approaching this potential move to the downside? As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for this potential move to the downside for the market to complete this W formation at the neckline, which is this previous resistance turn support here on the daily time frame. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, past the testimonials, you will see that at the moment I'm running a special promotion in which you have the possibility to join with a discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.